In 1941, when India was still struggling for independence, Sri Velagapudi Ramakrishna, a pioneer with a vision for a prosperous, strong and industrialized India, relinquished his secure job with the ICS and set up a sugar plant. Fueled by the most passionate and proactive people who are motivated to explore beyond their limits and add value to their clients and fellow partners, the group's chairman and managing director, Dr. V.L. Dutt, joint managing director, Mrs. V.L. Indira Dutt, the executive director, Mrs. Kavita Dutt Chitturi, are all set to accelerate the company's growth to reach further milestones. Versatility is KCP Heavy Engineering's strength. Its modern steel foundry, with a number of melting furnaces, are capable of making heavy castings, and the machine shop is equipped with a series of horizontal and vertical boring machines and gears and hobbing machines of various capacities. The large fabrication shop caters to light, medium and heavy engineering fabrication jobs of carbon steel, stainless steel and aluminium. The 350 tons crane in the shop floor facilitates huge equipment manufacturing and assembly. KCP has an enviable track record in the heavy engineering industry in domestic and international markets and offers a wide range of products and heavy machineries such as sugar, cement, mineral processing, chemical and fertilizer plant, steel plant, thermal power plant, hydropower projects, mining, oil and refinery plant, space, defense and nuclear projects. In the year 1995, KCP signed up with 5 Scale of France. 5 Scale KCP Limited brings a new level of excellence in all its activities, whether it is supply of machinery or executing projects on a turnkey basis for the sugar industry. KCP Vietnam is truly a landmark in the history of the company. With this venture, KCP is one of the few Indian groups to go truly multinational. KCP's state-of-the-art cement manufacturing plant at Macherla, Andhra Pradesh has an enhanced production capacity of over 500,000 tons per annum. India's first dry process kiln was installed here in 1958 by Humboldt, Germany, while it was still a prototype in Europe. In 1962, KCP installed a second wet process kiln in collaboration with Fives Lille, Cale, France. In 2010, KCP strategically chose the greenfield plant located at Ramakrishnapuram, Muktyala village, Jaggayapet Mandal in Krishna district of Andhra Pradesh. KHD Humboldt designed an energy-efficient plant that could deliver an annual capacity of 1.52 million tons. The plant is one of the most modern of its kind in India, featuring FL Smith supplied automation and plant instrumentation and a fully automated robot lab facility capable of sampling and sample transportation, preparation and analysis. KCP in the power sector. In 1999, when the government of Andhra Pradesh allowed private enterprises to generate their own power, KCP quickly rose to the challenge by establishing mini hydel projects on the Guntur Canal, an effective way to generate power from 5 different canal drops. KCP's hydel projects are a clear illustration of the company's commitment to the environment. KCP windmills in Tirunelveli produce 3.75 megawatts of power. A solar power plant of 1.1 megawatt capacity was set up in 2013 at Muktiala and later installed a thermal power plant at the same venue. An uninterrupted low-cost power supply of 18 megawatts from this captive power plant caters to more than 15% of power requirement of the cement plant. The waste heat recovery system to utilize cement plant's kiln waste gases saves coal consumption to the tune of 1.5 TPH during power generation. As part of its well-defined diversification plans, KCP enhanced its value and also improved its corporate visibility and brand image by setting up a prestigious 4-star business hotel in Hyderabad. KCP in community. Apart from being a business conglomerate, KCP has immense faith in community building. The group also sponsored the SARC Chamber Women Entrepreneur Council Global Green Business Summit in 2010, creating a networking platform for the women business communities across the SARC nations. Tamasoma Jyotirgamaya. Lead us from the darkness of ignorance into the light of knowledge. With this motto, Sri V. Ramakrishna Higher Secondary School, Tiruvattiyur, Chennai, and further expanded to Sri V. Ramakrishna Polytechnic, Tiruvattiyur, Chennai. Kids Pathashala, Macherla. KCP Adarsh Siddhartha Public School, which is managed by the Siddhartha Academy, Vijayawada, India. As a new world waits to be born in the new millennium, and a new generation waits to come of age, greater vistas beckon the company. With generations of corporate and human values as anchor and compass, a great conglomerate looks towards widening horizons. 75 years of progressive growth, professional and ethical values, embedded social responsibility. The KCP Group is gearing up to achieve more and more. The passion continues.
Let's start. Madam, please start.
Good morning. It is 10:30 a.m. Indian Standard Time, and I, Dr. V.L. Indradat, Chairperson of the Board, declares the AGM open. Dear members, I welcome you all to the 85th Annual General Meeting of the company. At the outset, it is my pleasure to introduce the members of my board and the management team present here with me. We have with us Srimati V. Kavita Dutt, Joint Managing Director of the company, and Ravi Chitturi, Technical Director. We also have the Audit Committee Chairperson, the Independent Director, Sri Thiruvengadam Parsadhi. Independent Director, Sri Harish Lakshmanan, is attending from Chennai. Chairperson of the Stakeholder Relationship Committee and Independent Director, Sri C. Panduranga Rao, is attending from Hyderabad. Independent Director, Dr. Janik Pillai, is attending from Chennai. Non-Executive Director, Sri V.C.K. Prasad, is attending from California. Additional Director Sri KVSR Subbaya is attending from Bangkok. Additional Director Sri Parthipan Brahma attending from Chennai. At the table with me is Sri Anish Taib Haider, Chief Financial Officer, and Sri Y. Vijay Kumar, Company Secretary. We also have with us other senior members of the management team, partners, and authorized representatives of the statutory auditors, K.S. Rao and Company, Secretarial Audit, Srimati Shobana Pranesh, and Scrutinizer A.K. Jain and Associates. I request, quorum being present, I hereby call the meeting to order.
You can do this.
Okay. Dear shareholders, welcome to KCP Annual General Meeting for the fiscal year 25-26. This year marks a milestone for your company as we celebrate 85 years of operations. Looking back, KCP began as a humble cooperative sugar plant and has grown into a well-diversified multinational company with interests in cement, heavy engineering, and hospitality, addition to sugar. We have provided jobs to more than 3,000 people, helped develop modern infrastructure as well as uplift local communities in the rural areas surrounding our factories, and we have been committed to building India through our involvement in landmark projects such as the Godavari Railroad Bridge, Polavaram Irrigation Project, Nagarjuna Sagar Dam, Srisailam Dam, as well as module for ISRO, Gaganyaan more recently. With the backdrop of geopolitical tensions causing persistent inflationary pressures, your company's strong performance for the fiscal year 25-26 indicates resilience during uncertain times. During the fiscal year 25-26, the flagship cement business delivered a healthy performance with production volumes growing by about 7% and capacity utilization improved to about 74%. Demand for our products remained robust across our key markets of Andhra Pradesh, Telangana, and Tamil Nadu, while we also maintained our presence in Maharashtra, Odisha, and Kerala. Demand for cement remained broadly healthy across most regions, supported by sustained government infrastructure spending, resilient housing activities, and steady construction in rural and semi-urban markets. The business recorded sales of 1,993 crores, which is up by roughly 13% compared to last year, and we realized a significant improvement in profitability compared to last year. The momentum strengthened during the fourth quarter with higher sales volumes driven by improved market demand, better capacity utilization, and enhanced operational stability across our manufacturing units. Although industry pricing remained competitive, higher volumes enabled us to improve operating leverage. Selling price realization remained largely stable despite volatility in coal and other input costs. However, EBITDA margin was impacted by volatile input prices, particularly imported coal and packing materials and HSD oil. To mitigate these pressures, your company continued to implement several strategic cost optimization initiatives. The waste heat recovery system and railway siding project have made significant progress and are expected to deliver sustainable reductions in operating and logistics costs while enhanced our ability to serve new markets competitively. Coming to the subsidiary in Vietnam, sugar units recorded higher sugar production by about 8% more than last year and an increase in cane crushed by about 9% more than last year. The increase is mainly due to more sugarcane area and better yield supported by subsidies provided by your company, as well as measures taken by the government to protect the domestic sugar industry, such as trade remedies by imposing anti-dumping and anti-circumvention taxes of Thai sugar in Vietnam. Sales realization was down by about 13% due to an oversupplied market and lower sugar prices, which in line with the international sugar market trend. Power sold to the national grid was up by about 10% because there was more bagasse available from the larger quantity of cane that was crushed this season. We hope that the next crushing season will continue to improve performance in fiscal year 26-27. Moving on to the hospitality business, Merkur Hyderabad KCP Hotel, which continues to deliver strong operation performances. Occupancy remained robust, averaging at around 82%, outperforming competing hotels within its micro market in Hyderabad. Revenue per available room grew by 4% compared to last year, primarily driven by a 6% increase in the average daily rate. In contrast, hotels of a similar scale in the same market recorded flat revenue for growth during the period. Our food and beverage segment also delivered encouraging results. The rooftop restaurant witnessed growth in both guest covers and revenue, with revenue increasing by about 31% compared to the last year. In recognition of its exceptional dining experience, the restaurant was awarded the Best Rooftop Restaurant by Highbiz TV. Building on this momentum, we invested in a retractable roof system to ensure unit uninterrupted operations and sustain guest footfall during the monsoon season. Coming to the heavy engineering business, which contributed about 112 crores to the standalone revenue. However, there were challenges on realizing margin in this business due to higher raw material costs and fuel prices attributed to the uncertain geopolitical situation. We observed a loss about 5 crores compared to a profit of about 2 crores last year. The loss is not due to weak demand, as demand is strong for heavy engineering products, and our order book is healthy at about 118 crores as of 31st March 2026. We continue to focus on strengthening capabilities, improving operational efficiency, and pursuing opportunities in higher value engineering products. Recently, we exported process equipment to MEIL for the first petroleum oil refinery in Mongolia. Looking ahead, we expect input cost pressures to gradually moderate as geopolitical conditions stabilize. Coupled with steady cement price realizations, the benefit of the waste heat recovery system increases by green energy, improved logistics infrastructure through the newly installed railway siding, and ongoing operational excellence initiatives are expected to strengthen our cost competitiveness and support a gradual improvement in EBITDA margins over the medium term. We remain confident that these initiatives will further enhance the long-term profitability and sustainability of our businesses. I am pleased to announce that our board has recommended a dividend of 0.50 per share, which is subject to approval by the shareholders today. Lastly, I would like to recommend the appointment of 2 new board members, Sri Parthapratim Brahma as a non-executive independent director and Sri KVSR Subbaya as a non-executive director on behalf of the board. I am confident that KCP will benefit from their counsel and considerable expertise in the years ahead. This concludes my opening remarks. Thank you all for your support this past year and looking forward to another strong year. I now request the Company Secretary to provide general instructions to the members regarding participation in the AGM.
Thank you, Madam Chairperson. Good morning, ladies and gentlemen. Members may kindly note that this annual general meeting is being conducted through video conferencing in accordance with the provisions of the Companies Act 2013 and the circulars issued by the Ministry of Corporate Affairs and Securities Exchange Board of India, SEBI. The register of directors and key managerial personnel, the register of contracts or arrangements, and other documents referred to in the notice of the annual general meeting have been made available electronically for inspection by the members during the annual general meeting. Since the AGM is being conducted through video conferencing, the facility for appointment of proxies was not applicable. Accordingly, the proxy register is not available for inspection. The notice of the 85th annual general meeting and the annual report containing the audited financial statements, including the consolidated financial statements for the year ended March 31st, 2026, along with the board's report and auditor's report, have been sent through electronic mode to those members whose email addresses are registered with or made available to the company or the depository. These documents are also available on the company's website. In terms of the notice of 85th annual general meeting, the following items of business are proposed to be considered at this meeting. The objectives and implications of the resolutions are provided in the explanatory statements forming part of the notice. I will read out the businesses one by one. First, ordinary business. Item number 1. Adoption of the audited financial statements, standalone consolidated for the financial year ended March 31st, 2026. Next, declaration of dividend. The board has recommended for a dividend payout of 50 paise per equity share of rupees 1 each for your approval. Item number 3, appointment of director in place of Sri Ravi Chituri, who retires by rotation and being eligible, offers himself for reappointment. Next, special business. Ordinary resolution for appointment of statutory auditors of the company. On the recommendations of the audit committee of the board has recommended for the appointment of Messrs. Brahmayan Company Chartered Accountants Vijayawada as statutory auditors of the company for a period of 5 consecutive years. That is subject to your approval. Next one, ordinary resolution. Ratification of the remuneration payable to the cost auditors, that is Messrs. Narasimhamurthy and Co. Cost Accountant, Hyderabad, Mr. S. Mahadevan and Co. Cost Accountant, Chennai, for the financial year ending March 31st, 2027. This is a Companies Act 2030 requirement. Next one, ordinary resolution for appointment of KVSR Subbaya as non-executive director of the company. And appointment of Sri Partha Pratim Brahma as non-executive independent directors of the company. The nomination committee of the board has recommended for their appointments, and the board recommended for their appointments for their approval. Next one, special resolution. Approval for payment of remuneration by way of commission payable to the independent directors and non-executive directors of the company. This is also recommended by the nomination committee, and it is also subject to the applicable provisions of the Companies Act 2013 and rules made thereafter. Dear shareholders, pursuant to the secretarial standard and general meetings issued by the ICSI, it is not mandatory to propose and second the resolutions. Further voting by show of hands is not permitted, as the remote e-voting facility has been provided to the shareholders. Company has received requests from few members to register themselves as speakers at this meeting. Accordingly, the floor will be open for these members who ask questions or express their views. The question and answer session will be facilitated once the chairperson opens the floor for discussion. With this, I request Madam Chairperson to continue with the AGM proceedings.
Thank you, Mr. Vijay Kumar. Since the notice conveying the 85th annual general meeting, together with the annual report of the company for the financial year 25-26, has been circulated electronically to the members. With the consent of the members present, the notice is taken as read. The statutory auditors, Mr. K.S. Rao and Company, the secretarial auditor, Srimati Shobana Pranesh, have issued unmodified opinions in their respective audit reports for the financial year 25-26. There are no qualifications, observations, adverse remarks, or disclaimers in the statutory auditor's report or the secretarial audit report having any material bearing on the functioning of the company. Accordingly, in the terms of Section 145 of the Companies Act 2013, the statutory audit's report is not required to be read at this meeting. I now request Sri Anish Tarbe Haider, Chief Financial Officer of the company, to moderate the question and answer session and facilitate the members who wish to speak or seek clarifications.
Thank you, Madam Chairperson.
Yeah.
Dear shareholders, as mentioned in the notice of the AGM, only those members who have registered themselves as speakers will be permitted to express their views and ask questions during the AGM. Members are requested to keep their question brief, specific, and relevant. To avoid repetition, responses to all the questions will be provided towards the end of the meeting. Members may also note that the company reserves the right to limit the number of speakers depending on availability of time. Shareholders are requested to restrict their questions to the financial statements for the financial year 25-26 or to any agenda item mentioned in the notice of 85th AGM. Other shareholders seeking any information may write to investor@kcp.co.in. Registered speakers are requested to unmute themselves and proceed with their questions. Before speaking, please mention your name, folio number, BP ID and client ID number, and the location from where you're joining the AGM. Each shareholders will be given 3 minutes to raise their questions. After asking your question, you may mute yourself and continue watching the proceedings. We have 14 speakers registered for this AGM. The first speaker, may I request Ms. Jaya Bharti Tumuluri to proceed with her question, please.
Ladies and gentlemen, our speaker shareholder number 1, Ms. Jaya Bharti Tumluru, and second speaker shareholder, Ms. Shahnaz Begum, who had registered but has not joined the meeting at the moment. Therefore, we will move to our third speaker shareholder, Mr. Yusuf Yunus Rangwala. Please go ahead, sir. We will wait for a moment while Mr. Rangwala joins.
सर आपको आवाज आ रहा है सर हाउ आर यू वणक्कम सर वणक्कम
Yeah, we can hear you, Mr. You can proceed with your question, please.
वणक्कम सर आपको आवाज आ रहा है
Yes, please. Please proceed with your question.
Yes, sir. Speaking from Mumbai, city of Mumbai, sir. Sir, I am very happy and very proud, shareholder. I issue annual copy. That is a very good, very fantastic. Sir, I would like to know what are the total number of staff working at our office. When was the last bonus given, sir? Many years have passed. Sir, this is a 85 years old company. In the history, till now you declare a bonus, sir. I would like to know. In these 85 years, whether any time you declare a bonus, sir, I would like to know. And point number two, what is the in this war effect? What is the effect on our business, sir? Point number two. Point number three, what is the import-export orders are at present? What are the importers? In which country our product are export, sir? आप समझ के मेरा क्वेश्चन सर which country our product are export? Point number four, if possible, and I'm staying in Mumbai and this is in Chennai. Sir, what business we are having after this new government? What is the effect on our business, sir? After this new government, what government is having a very good policy in Chennai. So this policy will help our business to grow. Sir, I would like to know point number five, if possible. Can you send me some sample product of your which you use as a home use? Chini, sir, if possible. This is my humble request, and I request our company secretary for having a good and very polite service with our shareholders, sir. I am very happy and very proud shareholder of this company, sir. Sir, nothing more to add. I end my speech. Sir, wishing you a very happy Pongal, which is coming in December. All of the board and all of my friends, and I wish our company chair madam and all the team. There are two ladies sitting on the board. There are two Lakshmi sitting on the board, madam. दो लक्ष्मी का है तो हमको कुछ बोलने का कुछ पूछने का कोई सवाल ही नहीं मैडम आई विश यू गुड लक एंड वनक्कम स्पीकिंग फ्रॉम मुंबई सिटी ऑफ मुंबई सर जय हिंद जय महाराष्ट्र at the time of the festival Diwali madam at the time of Pongal please send us some sweet so that we can remember madam this is a chini company कुछ मीठा हो जाए मैडम थैंक यू वेरी मच मैडम जय हिंद वंदे मातरम भारत माता की जय जय हिंद
Thank you.
Thank you, Mr. Yusuf. May I now request Shri Rajan Shah to ask your
Yes, sir.
question, please.
Okay.
Mr. Rajen, sir, will you just unmute your connection?
Hello. Hello, can you hear me?
Yes, we can hear you.
Acha, okay. First of all, good morning to everyone. I had few questions. Uh, we are a 90-year-old company and our turnover is just about 2,000 crores or something. And we have a cement business which we have been able to scale up to 4.3 million tons over these 90 years. Sugar business, 11,000 tons of capacity. Engineering business, we have been mentioning in the annual report that will turn around for the last 10 years, but we have not been able to turn around this business, engineering business. Every year we do 90 or 100 or maybe 110 crore of turnover. So what is actually the game plan over here? We are sitting on prime piece of land in Chennai for this engineering unit. Neither the engineering unit makes money nor the land. 75 acres of land worth 3,000 crore is just being wasted actually. We should do something about that. Cement, uh, I mean, 4.3 million tons, would be valued at about 3,000 crores. Sugar would be valued at about 1,000 crore, 4,000 crore. Land, 7,000, 3,000 crores. So 7,000 crores should be the market cap. Your market cap is 2,100 crore. Now, despite sitting on 500 crore of cash, we are not announcing any buyback. The stock is grossly undervalued, but yet we are not announcing buyback. I fail to understand why the management is hesitant to declare a buyback of 200 crores. Uh, I mean, so many companies come out with buybacks and then the stocks go up 50, 100%, and everybody's wealth moves up. It's not only the shareholders who are going to make money from this, but also the promoters. So, what is the hesitancy in growing wealth for shareholders and for your own self? So, these are my few questions actually. And also, if you can give some outlook for cement, sugar, and engineering, because engineering outlook for the last 10 years I've been reading in the annual report. it's that we'll be able to turn around, we'll turn around. For last 10 years, we are in this range of 90 to 100 to 110 crore only. So what exactly is the plan for engineering also, and the land, the prime piece of land in Chennai, something should be coming out from the management on this, it's worth 3,000 crores. So why are we wasting this opportunity of encashing this piece of land or developing this in association with a group like Godrej or maybe, Tatas or Mahindras, something like that. So I would like to have your view on this. Thank you so much.
Thank you, Mr. Rajan Shah. The fifth speaker, Shri Damodaran Tumuluri. Can you please unmute and ask your question, please?
Ladies and gentlemen, our fifth speaker shareholder, Mr. Damodaran Tumruru, who had registered but has not joined the meeting at the moment. Therefore, we will move to our sixth speaker shareholder, Mr. Samarth Singh. So we request you to unmute your connection. We will wait for a moment while Mr. Samarth Singh joins.
Yes, good morning. I'm audible.
Yes, sir, we can hear you.
Okay, thank you for the opportunity. I have sent my questions in advance. If you can confirm if you received them, I don't think I need to go through all of them one by one.
Yes, we have received your questions and it has been taken on records. It will be answered when.
Okay, thanks. I'll just ask two questions. They are part of the list, but I think it's important that chairperson and GMD specifically answer these questions. First one is that our business is a capital intensive business. Across all the different businesses. And our annual report does not talk about return on capital employed at all. It talks about all the other metrics, but ROCE is never mentioned, which I think is one of the most important, metric for any business. And if you look at our 5-year or 10-year return on capital employed, it's about 12%. And this is on book value, not on the actual value of the land, etc. That, as one of the previous shareholders was mentioning. So is a 12% return on equity an appropriate metric, or do you think we want to do better? And is it something that the board and management looks at internally as a performance metric? That's the first one. And the second one was, even after providing for all the CapEx, whether it's for the Vietnam expansion that we've planned or the waste recovery is almost done, I think the railway siding, we still have a significant cash balance, but our payout ratio is very low, our dividend payout ratio. So will the board adopt a formal dividend or a capital return policy, and preferably a buyback policy, a share buyback policy, given the discount to intrinsic value? Those are two specific questions. If you could answer, I appreciate it. Thank you.
Thank you, Mr. Samar. May I request Shri Redappa Gundluru kindly unmute and ask your question.
We request Mr. Gundluru to unmute your connection. We will wait for a moment while Mr. Gundluru joins.
Yeah. Am I visible? Am I audible, ma'am? Moderator?
Yes, please. Please go.
Yeah. Respected Chairperson, Dr. V.L. Indira Dutt, Madam Garu, our Joint Managing Director, Ms. V. Kavita Dutt, Madam, and our Director, Ravi Chituri Garu, all other non-executive directors, independent directors, our CFO, Mr. Anis Taibaliji, and my company secretary, Mr. Vijay Kumar, and all other members of the board, my fellow shareholders and scrutinizers, auditors, and moderator. Good morning. Namaste. Myself, Redappa Gundluru, attending this AGM from Hyderabad. As a shareholder, I am very proud and long-term shareholder. First of all, I sincerely thank the board and the company secretary's team for sending the annual hard copy as requested promptly. Ma'am, the annual report is excellent quality beautiful design and easy to understand. And also corporate governance is very transparency, ethically doing. That's the reason I thank to all our KMPs, CS, CFO team, all KMPs of my company for preparing the wonderful annual report. Ma'am, on page number 6, our Dr. VL Indra, that madam's smiling photograph is very graceful and inspiring. Congratulations to entire team for presenting the wonderful information and the annual report. This very special year as KCP Limited celebrates 85 glorious years of the legacy. My heartfelt congratulations to the management, all the KMP's employees for this remarkable milestone. I am delighted to see the company's stellar performance. Revenue has increased significantly. PAT has shown excellent improvement, and company's cost control has been outstanding. This is strong leadership, operational excellence, and disciplined financial management. I congratulate the CMD, JMD, CFO, of the entire KCP family this remarkable achievement. I also thank the board for recommending the dividend. Thank you, ma'am, for this. It reflects your commitment towards rewarding the shareholders. I congratulate the entire team for the prestigious recognition mentioned in the page number 144. Many awards, especially CI Award for Excellent Energy Efficient Unit 2025, National Award for Excellence in Energy Management, Quality Cycle Awards, and CCQC 2025 recognitions, and especially Best Award for our plant Muktala in Telangana, several other many more achievements. It shows my company's the performance commitment towards the growth. Clearly demonstrates this one. And page number 148, the photographs of the KCP Vietnam industries are excellent. It is wonderful to see KCP expanding internationally with the confidence. I also congratulate the company for being recognized among the fastest growing cement companies. And the photograph, with our Honorable Chief Minister of Andhra Pradesh during this award function is truly impressive and reflects the company's growth stature. The final cover page with titled Innovation Through Excellence. Innovation with excellence is wonderful, outstanding. The photographs showcasing Muktala plant, Macharla, Chennai operations, and heavy engineering division, sugar and energy plant, the thermal, hydrothermal, solar and wind power projects, especially in Hyderabad, Mercury, the hospitality business also, and Vietnam operations. Beautifully presentation has been done. Diversified center of the KCP. I came to a lot of information through the pictures. Pictures are testament. Pictures are speaking. Numbers are speaking. Thank you, CSCA, for wonderful annual report with pictures. I also appreciate the company, the high standards corporate governance. I warmly welcoming the new director, Mr. Brahmaji, and also Subayaji, and I wish all the best for the successful future. I also appreciate the company secretary, Mr. Vijay Kumar, for excellent coordination. Is always the reachable man, professional person with the shareholders and with the compliance part he's doing. Thank you, Vijay Kumar Garu. And thank you, CFO Mr. Anishji, for maintaining strong financial discipline and effective cost control. Ma'am, I have a few questions I would like to ask you. What is the management outlook for financial 27 in cement division? And the increasing the infrastructure demand, housing demand. So what is the outlook? Second question is, so what capacity expansion or any moderation plans for being considered to the Muktala and Macharla cement plants? Third one, so what is the current order book future outlook for the heavy engineering division? Fourth one, Vietnam business performing and about this performance. What are the expansion plans for over the 2 to 5 years. Fifth one, renewable energy is becoming increasingly important. So what percent of the company's total power requirement is currently met through our hydel and solar wind energy, and what is the long-term target? Sixth question, what initiatives you are being taken to further improve EBITDA margin through operation efficiency and also cost optimization? And seventh question, what is the company's vision for next 5 years and especially 2030? We are entering the 86th the year of the operations. And also few the questions on the other expenses. Ma'am, the cost control is good, but I would like to ask some clarification expecting the bad debts written off 0.25 lakhs. What is the reason? Last year also is there. So every year bad debts are is there. So what is the reason, Mr. CFO? And assets write-off. So what is the reason this assets write-off? And the traveling and convenience also steadily is there. So what is the reason? And also in the resolutions and the independent debts also the proposing the 5 lakhs. So what the justification this the remuneration I would like to know. So finally, I concluding, ma'am. So I have done e-voting already. No question further. So e-voting has been, and then we have faith on the board, trust on the board, especially Indira madam. You are the iron lady, dynamic lady. Under your leadership, we are growing. So hopefully, coming financial year, we will achieve many more higher awards, rewards, amazingly under your leadership. That's the reason I pray God to give more strength, ma'am. So I humble suggestion is request is since our Hotel Mercure Hyderabad is part of our KCP group, I have small request to the management to, it's possible, kindly consider the providing the complimentary lunch or refreshment for the shareholders and over Hyderabad attending this future the event. So I would like to thoughtful the gesture and also future strengthen shareholder relation. So finally, thank you, Chairperson ma'am, for wonderful your rewards and the financial performance. So entire board of directors and company secretary Mr. Vijay Kumar, and also our Raniji CFO. I wish all the best to continue success. And thank you so much for giving this opportunity. Thank you very much, madam. I wish everyone to good health and pray God to give the health is important. And also don't forget to all our KMPs. KMPs are very important. Without them, the not possible annual report and the success. So all the employees, thank you so much for giving this opportunity. God bless you, ma'am.
Thank you.
Thank you.
Ladies and gentlemen, our seventh speaker shareholder, Mr. Murugesan M, has joined the meeting. So we will take his question. Please go ahead, sir. We will wait for a moment while Mr. Murugesan joins.
Good morning. Am I audible?
Yes, sir.
Yes, sir.
Thanks for this opportunity. At the outset, I want to thank the Company Secretary's office for the effective communication and follow-up, and also for sending a hard copy of the annual report. Congratulations for completing 85 years as a limited company. Though I sent an email listing some of the questions, I will be reframing some of the questions. Page number 68 of annual report, there is addition of 9.94 crores in value of land. Please elaborate. Page number 98, there is a undisputed trade receivable, but more than 3 years is equal to 3.6 crores. So even if you give a bank guarantee is generally even for if it's a bank guarantee for warranty, it's not more than for 2 years. So please elaborate. Page number 198, 199. Revenue of our Tiruvatti unit is 1112 crores. If it is rendered as 105 crores. And cost of raw material is only 34.9 crores. Please correct me if I am wrong. So prima facie, it appears there is a very good value addition, but why we don't, I am not clear as to why we are still incurring loss. My other questions are, well, is there any cost or time overrun in implementing the waste heat recovery system or railways lighting? If yes, please quantify. And also, any action has been taken against those who are responsible. 2. EBITDA per ton of cement and how it compares with the best in the industry. Any expansion in India or Vietnam? Certain resolutions were passed in the last year to unlock the value of surplus land, but there is no further update. Though cash flow is good, dividend is very low. KCP Vietnam is sitting on more than 900 crores of cash. Why not make it more, pay more dividend, which in turn will enable KCP Limited to pay more to the shareholders. Thiruvartiyur unit has again slipped into loss. The last AGM, one shareholder informed that the unit has already suffered a bit loss of more than 100 crores. The management is also keeping its fingers crossed, and every year the annual report repeats the same thing about competition, etc. And we are not able to make any strategic decisions. To say KGP Vietnam makes money and Thiruvartiyur loses money may not be out of place. It's like stealing Peter to pay Paul. I don't know when there will be a light at the end of the tunnel. May I request the management to voluntarily forego the commission till such time the Thiruvartiyur unit makes profit continuously for 3 years. Thank you. They will set a very high precedence as a high level of corporate governance. Thank you.
May I now request Shri P. Shyam Sundari to please unmute yourself and ask your question.
Mr. P. Shamsruddin, please go ahead. We
Mr.
will
Shah?
wait. We will wait for a moment while Mr. Sundari joins.
She.
Hello? I'm audible, sir.
Yes, sir, you are audible.
Good morning, respected Chairman, Board of Directors, Secretary and his team, and my fellow shareholder. I congratulate the management on the eve of this AGM. The company is performing well. Management does a wonderful job. The numbers speak about the performance. The chairman's speech was brief and elaborative. The only grievance of the shareholder is expecting bonus issue and better dividends, sir, which is long pending due. It is right time to reward the shareholders. I hope the management will not let down the shareholders who have stood behind in thick and thin. I request the management to be cost effective wherever possible. I request the management to consider the hospitality part of the shareholder, especially the speaker shareholder, sir. I thank the management for giving me the opportunity. Thank you very much, sir.
Thank you, sir. May I now request Shri J. Abhishek to unmute and ask your question, please.
Mr. J. Abhishek, will you just unmute your connection?
Sir, can you hear me, sir? Am I audible?
Yes,
The
sir,
first
you're
of all,
audible.
I congratulate the management on the eve of 85th annual general body meeting. The trust all is well with you and your family in this challenging situation. A company deserves much more respect than the current market cap after completing more than a decade of successful operations, profitability, and becoming one of the strongest brand in the respective segment. So first of all, I would request you to kindly arrange a planned visit for the shareholders. That is, we have been requesting for the past 3-4 years, but the management has not considered. I would request you to kindly consider a planned visit for the shareholders this year. And what are the steps being taken by the management, sir, to reduce the other expenses, legal professional charges, and the audit fees? I would like to know from you, sir. And whether our company is taking part in con call, quarterly presentations, and meeting with global investors on a regular basis. I would like to know. And most of my pre shareholders have asked various questions, so I shall not repeat the same questions again in the interest of time. And hospitality industry also, our KCP is involved. So whether do we have any establishments in hospitality in Chennai, or which are the parts that we are focusing in the hospitality industry, or in future do we have any proposal to demerge the hospitality industry from the KCP Limited and create a separate entity in order to have a separate entity for the KCP Cement and KCP Hospitality. So whether any proposal is there, you may kindly look into, and whether our company is planning to acquire any hospitality hotels which are not able to run any listed entities or not. You may come across, and nothing much to ask. Hope that the company takes all our questions in the right spirit and kindly try to consider hybrid AGMs in the years to come, as most of the senior citizens are not able to join because of the digital challenges in this virtual platform. So try to consider hybrid in the years to come. I wish the company and the board of directors a great success and prosperity in the coming future. And thank you for giving this opportunity, sir. Hope to see you in the upcoming hybrid AGM next year. Thank you very much.
Thank you, Abhishek ji. May I now request Shri P. Gopal to kindly unmute and ask your question.
Ladies and gentlemen, our 11th speaker shareholder, Mr. P. Gopal, who had registered but has not joined the meeting at the moment. Therefore, we will now move to our 12th speaker shareholder, Mr. A.V. Manisundaram. So we request you to kindly unmute your connection. We will wait for a moment while Mr. Sundaram joins. So please accept the prompt.
Are you able to hear my voice, sir?
Yes, sir.
Hello. Welcome 85th Annual General Body Meeting, KCP Limited. Proudly, I announced I am a shareholder about this year. I have conducted by means of video conference, and in all the annual report is very good. Chairperson, madam, and Vijay Kumar sir, CFO, director, all executive, and fellow shareholders. More awards are gone from central government and state government. Very happy, sir. Solar power, cement, and sugar industry is running very well. And some annual report, bad habits, and asset sale and loss. CSR is very good. Minimize the cost. Hospitality to be considered to the shareholder who are attend the meeting by means of video conference. Arrange planned visit. And I hope all the action should be in very success. Thank you. Thanks a lot, sir.
Thank you, Mr. Mani. May I now request our 13th speaker, Mr. Shri Prakash Chand Galada, to kindly unmute and ask your question, please.
Ladies and gentlemen, our speaker shareholder number Mr. 13th, Mr. Prakash Chand Galada, who had registered but has not joined the meeting at the moment. Therefore, we will move to our 14th speaker shareholder, Mr. V. Rangan. So we request you to kindly go ahead. We will wait for a moment while Mr. Rangan joins.
Hello.
Yes, sir, you're audible.
Good morning, shareholder directors. I'm a very long time shareholder of the company, but I feel at the 10 years report, as I see that your gross profit after taxes is the highest, but still your dividend payout is very less. I am really surprised how it is that. Please state me how much electricity per ton of cement you have consumed, and what is the net realization. And page 77, your net profit was 131 crores. On page 80, in operating cash flow, I feel it is only 55 crores. There is a ratio called CFO by PAT. It is hardly 0.5. Whereas in the consolidated, in page 159, it is 275 crores, and cash flow in page 162 is 206 crores. Why the difference? Please state that. In PBT in Vietnam industry, the KCP, it has drastically fallen from 318 crores to 235 crores, and you reduce the cane price also. Why the industry is working very well there? Or I would like to know what is the current expansion in the KCP and in the Vietnam also. The tax concessions are still there. If so, for how many years now? Last year, what is the net realization? 25, 24, 25, 25, 26. What's the current year realization during the balance sheet year? And what is the current going 26, 27? I feel except the shareholders, everybody is earning the increased earnings from the company. But you also have to reward, because the market capitalization almost remained the same for the last 6 years, 7 years. That speaks volume about the company's efficiency. And what is the total tonnage today? And industry is going only 7 to 8%. Please state me all the reasons, whatever the questions raised by me. Thanks.
Thank you, Shri Rangan. So we have finished the questions raised by all the 14 shareholders who are present. So much he asked. Yeah, can start answering.
Thank you, Mr. Anish. I now request the company secretary to
Answers to questions to be answered.
Yeah, questions to be answered. Yeah, okay.
Good morning to all. Kind of divided these responses, so I'll answer some of the questions that were raised regarding the KCP Vietnam sugar business. The first question was on sugar sales and inventory. It's usual for us to maintain a 10 to 15% of production as rollover stocks before we start production for the season, to ensure that there's continuous supply to customers. The stock at the end of the calendar year 2025 is high compared to the calendar year 24 due to record production and market issues and due to falling prices. However, this issue is taken care by rearrangement of markets during 2026. The average realization is decreased by around 8% compared to 2025. The realization mentioned in the query is high and not realized during the calendar year 2025. Next question. The next question was on cane cost. The cane price has been decreased by around 20% compared to 2025. The expected reduction percentage in cost of production in 26 will be around 15 to 16% lower, in spite of spurt in other costs due to the Gulf prices and the costs during off-season. Next question was on sugar recovery. We crushed a record quantity of cane, yet sugar recovery declined by 4.49%. This being mostly a rain-fed and sugar recovery is unpredictable and is subjected to weather conditions like rainfall during crop growth and harvest, number of rainy days and sunshine hours, length of harvest season, etc. Hence, the sugar recovery rate is linked to multiple natural factors. Question on expansion, timeline, and funding. Based on the investment certificate, the completion of sugar factory expansion is scheduled in 2027 and cogeneration plant in 2028. The funding proposal is 30% from internal accruals and 70% from bank. Bank options will be decided depending on the lending rate, interest rates. The next question was on power tariff. The decree to award fixed tariff of 7.03 US cents per kilowatt is still in force, but is likely to be suspended when amendment for electrical law is passed by the parliament. At present, there is an ambiguity about applicable tariffs for new power projects in renewables, and Vietnam Sugar Association approached the government of Vietnam to extend favorable policy to sugar industry. Cane availability, there was a question on cane availability. The expansion to 15,000 TCD at Sonhua plant is to reduce the crushing period from 160 to 180 days to 120 to 130 days, with a raw material requirement of around 2 million tons to ensure major production in the peak recovery period. For 2025-26, company invested nearly 31,000 hectares, which will mostly meet the requirement of expanded capacity. Question on flood insurance. The claim process has been completed for the flood damage. Level of recovery and time of settlement depends on the assessment from the insurance company's final decision. Company is regularly pursuing the issue. Question on income tax. Paid no income tax for 24 and 25 owing to the tax holiday. At present, the government of Vietnam fully exempted corporate income tax for some sectors like agri, sugar being included, but the period is not stipulated. If the exemption is withdrawn, company is obliged to pay the corporate income tax at 10%. Right now, the corporate income tax for power is 20% without any exemption. There was a question on ethanol opportunity. E10 blending is mandatory in Vietnam, but there is no assured price or price share policy from the government on domestic ethanol production. Local ethanol production is based on cassava, is owned and operated by oil companies, and most of the ethanol requirement is met with importers. Petrol price is dynamic and adjusted by the government on a weekly basis and is expected to lower once the Gulf War ends. Even with the good government policies on price, ethanol production from sugar factories in India met difficulties during 2025-26 due to low quota allotment compared to grain-based ethanol. Company will invest in ethanol production in case there is a fair policy and comfortable value addition to molasses, addressing the rise in production costs due to tougher environment laws. There was a question on our investment on the Promia Biopharma, I think that came in via mail. Investment in biopharma is to diversify business field and enter into a $8 billion Vietnam pharma market, which is majorly met with imports at present. The project will produce high-end biopharma products, which include cancer treatment. Right now, the capital to be deployed for the project is $30 million USD. Stakeholders to contribute 20% and 80% will be sourced from commercial banks. It's expected to achieve around 100 million USD turnover in 6 to 7 years of operations with around 20% returns. I'd now like to hand over to CFO.
Thank you, madam. So we'll continue with the questions raised, answers for that. On the cement business, Sri Shamrat Mohan had some questions, which I'll try to address. On the cement margins, so cement EBITDA is expected to improve subject to softening of input prices and steady price realization and subject to demand scenario prevailing in the southern region. On the question on WHR waste heat recovery system, The was commissioned in April 2026. The expected saving in absolute value will depend on the level the plant is utilized. The payback is expected in 5 years' time as per the project forecasted figures. And as far as the substitution of power is concerned, it can substitute about almost about 30 to 40% of the power, depending upon the volumes of our chemical capacity utilization. On the cement volumes, the company is targeting approximately about 7 to 9% growth over the previous year for this financial year. This year it is projected to take the volumes to 3.3 to 3.5 million metric tons. Question on engineering division. Management has set an internal target of about 130 crores of turnover with the PBT of 3 crores in this year. There is also a question on valuation of the Chennai land banks. So the management will take appropriate steps for a formal valuation in due course. Then on the return on capital employed tracking of parameters, the company, when evaluating any new project, always use ROCE payback period and IRR parameters for performance. And it tracks it for making any decision for investment into any projects. And just for the information, for the last 10 years, the average ROCE has been about 17% for standalone and about 19% for consolidated P&L. And there is a question from Mr. Murugesan on overruns on the capital project. So to answer that, there are no cost overruns in WHR. There was a time overrun of about 6 months for WHR, out of which 4 to 5 months was attributable to unprecedented heavy rainfalls from August to October 2024 and shortage of manpower. The project cost of railway siding increased due to change in track routing due to land-related issues, which required acquisition of additional land and modification to the material handling equipment to cater to the container movement of the cement. All this put together costed the company rupees 40 crores more than the estimated project cost for the railway siding. And on the expansion, I think the management has already answered that. There's a question on EBITDA per ton of cement. So last financial year, the company recorded EBITDA of about 377 rupees per metric ton. KCP Limited is a strong regional player manufacturing quality cement with substantial market share in Andhra and Telangana. The company continues to consolidate and strengthen its foothold in the region and has taken steps to optimize its manufacturing cost as well as the logistics cost by initiating the WHR and the railway siding project as briefed by Madam Chairperson earlier. And Mr. Yunis had asked certain questions. The number of employees totally, it totals to about 1,170 on the rolls. And on the export, engineering unit exports its products to African continent and to countries like Mongolia. Mr. Gungluru had asked question on the order book. The order book for engineering unit stands at about 118 crores. And to answer the question on how much renewable energy is used by the company, it ranges about 35 to 45% with the WHR becoming operational. There is a question on bad debts written off. So the value of bad debts written off is about 2.5 lakhs for the last financial year, which is very low as compared to the size of the business. And asset write-off amounted to rupees 71 lakhs for the last financial year. And travel expenses are it's commensurating with the size of the business. Mr. Murugesan had raised a question on addition to the value of land by about 9.94 crores. So this, as answered earlier, because of the land acquisition that was required for WHR, we had to acquire some additional land amounting to rupees 10 crores approximately. On the page 98, he also pointed out undisputed 3.6 crores outstanding for more than 3 years. So these are outstanding from the cement dealers who are still on registered with us as dealers, but against which we have got a security deposit which offsets that balance outstanding. And Mr. J. Abhishek had raised question on legal and professional and audit fees. So I would like to clarify that there's a strong process of evaluating the amount of payment made to the consultants. So it is in line with the industry and commensurate with the size of the business. Mr. V. Rangan had raised question on electricity per ton of cement. So the power ranges about 67 to 69 units per ton of cement. And there is also a question raised on PBT to cash flow difference. For standalone, 133 crores PBT, whereas in the cash from operating, the cash flow is about 55 for standalone. And similarly for consolidated, 275 crores PBT and cash from operating activities, 206 in the cash flow. The reason for the difference is because the cash flow considers the changes in the working capital as well. So net of that, the net cash from operating activities is stated in the cash flow. That's Madam Chairperson. Yeah, please.
With Madam permission, I will reply for 3 of your queries, sir.
Okay.
First one, about the buyback of the shares. I wish to inform to the shareholders, our paid up capital stands at 12.89 crores only, with approximately 60% of the equity was held by the public. The company has no plans to undertake any shares buyback, as it intends to deploy its resources towards growth and expansion initiatives. Next up, about the rate of dividend. The board may consider and recommend the dividend in line with the dividend distribution policy of the company, adopted by the board and placed on the website of the company, taking into account the company's cash flow position, fund requirements for future expansion, and investment needs for new projects. Lastly, the company does not have any plans to monetize the assets in Chennai through a sale. Instead, it is evaluating the opportunities to utilize the land for logistics and warehousing purposes, as well as for supporting future business expansion initiatives. For assets located at other locations, the board may consider and approve the development plans based on the prevailing market conditions and the viability of such projects. The same may be communicated to the shareholders through the stock exchanges at an appropriate time. Thank you.
Madam Chairperson, with this, we conclude the question and answer.
Okay.
I now request you to take over.
I now request the company secretary to explain the procedures for e-voting at AGM and to inform the members about the date of the declaration of the combined results of the remote e-voting and e-voting conducted during the AGM. The company secretary will declare the combined voting results within the prescribed timelines in accordance with the applicable statutory and regulatory requirements.
Thank you, Madam. Dear shareholders, pursuant to the provisions of the Companies Act 2013, the rules made thereunder, and SEBI listing obligations and disclosure requirements, regulations 2015, the SEBI LODR, the company has provided the facility for remote e-voting to the members in respect of the resolution proposed to be transacted at this annual general. The remote e-voting facility commenced at 9 a.m. Indian Standard Time and Friday, July 31st, 2026, and concluded at 5 p.m. Indian Standard Time on Sunday, August 2nd, 2026. The Board of Directors has appointed Sri Balu Sridhar, or failing him, Sri Anil Kumar Jain, partners of Messrs. AK Jain Associates, Company Secretary, Chennai, as the scrutinizer to scrutinize the entire e-voting process in a fair and transparent manner. Members who have not cast their votes through remote e-voting and are participating in this meeting may cast their votes during the AGM through the e-voting system provided by NSTL. Members are requested to refer to the instructions contained in the notice convening the AGM or those displayed on the NSTL video conferencing platform for seamless participation in the meeting and for exercising their voting rights through the e-voting system. The combined results of the remote e-voting and e-voting conducted during the AGM together with the scrutinizer's report will be declared within the prescribed timelines and placed on the website of the company and the website of NSTA. In accordance with the applicable provisions of the law, the resolution set out in the notice convening the annual general meeting shall be deemed to have been passed on the date of this annual general meeting, subject to the receipt of the requisite majority of votes in their favor. The voting results will also be submitted to the stock exchanges in compliance with the applicable regulatory requirements. Madam Chair.
Yeah. I now declare the proceedings of the 85th annual general meeting of the company closed. I request those members who have not yet cast their votes through remote e-voting to kindly exercise their voting rights using the electronic voting facility made available during the course of the AGM. The e-voting facility will remain open for the next 30 minutes to enable the eligible members to cast their votes. Members may kindly note that the e-voting facility will be disabled immediately upon the expiry of the aforesaid 30 minutes. Thereafter, the annual general meeting shall be deemed to have concluded. Thank you all for your participation and continued support. Stay safe and have a pleasant day. Thank you.
Thank you, Madam.
you.